Hello, everyone. Happy Non-Farm Payrolls Friday, December 8th, 2023. How is everyone doing? Jacob, good morning. Patrick, good morning. Happy Friday to you, too. Good morning, Sterling. Thank you for putting in all the news. The unemployment rate 3.7 versus 3.9 consensus. Where else do we sit? I'll get to the data in a second. Let's just see who else is in here. Good morning, Heinrich. Good morning, Anissa. So, we have the last non-farm payroll for the year of 2023. The year I think that's gone by rather quickly. Oh, now, options 22. Greetings from Cold Warsaw. What's the temperature there? Options 22. I saw that they've had some winter weather over there in that part of the world. Hope you're doing well. Try to stay warm. So thank you for tuning in. We had non-farm payrolls. The number we have 199K versus a consensus of 180, previous 150. That's not the bigger thing. It's the bigger thing people are focused on is the unemployment rate dropping from 3.9 to 3.7, as Sterling put in the chat. This jumped out at me. Our average hourly earnings month over month at 0.4, which beat consensus and was up from previous. So month over month earnings coming in strong. Participation rate ticking up a bit, so a little higher participation week, and weekly average weekly hours also ticking up. So behind the scenes, the non-headline numbers were pretty strong there. Manufacturing payrolls did miss. Private non-farm payrolls. Now, also remember, you had the settling of the strike with the, in LA with the actor, the writers, and everything, and you had the GM strike being settled. So that's coming back into play here. But you know what? For people looking for a rate cut, especially an early March rate cut, there's no way. Powell next Wednesday has to be hawkish with this. I mean, there's no way. And you can say, oh, it's a one-off again and one-off, but even the previous was 3.9. We're not into the fours yet on the unemployment rate. So, yeah, there will be revisions and everything else. Yep, but you know what? I think you can't come across dovish next week, else the market's going to really launch. Next up, consumer sentiment at 9 Central. I'm really watching the inflation expectations, the current and 5-year inflation expectations. That's going to be the major components I'm taking a look at 9. So do not ignore the 9 a.m. data. Then that's about it besides rig counts. MAP it was a lot redder earlier. Microsoft taking off, Apple sort of flat, Google pulling back, Meta pulling back a little. So your comm services, Oracle up, but sort of a mixed thing. Oil triggered a little 4-hour mini double bottom and is running. So that's where we sit there. We do look at the groups. Again, comm services up at the bottom, energy at the top, everything else just sort of mixed, although consumer cyclical not doing so hot this morning. Fed watch still at pause mode, but remember we were looking for a cut in March. Now the first cut is in May, which I still think is overly optimistic, and cutting all the way down to still 4 to 4.25 by next December. So dropping it from the current 5.25 to 5.5 to 4 to 4.25, so 1.25 percent rate cuts still priced in for next year, which I think is overly optimistic unless stuff falls off a cliff, which it could always do. Still in greed mode. Are we done yet? By the way, remember there was nothing earnings related today. There was yesterday afternoon with Broadcom, Lululemon, DocuSign. All right, so it's contract roll day, it's the beginning of contract roll day. Not everybody rolls today, but remember the contract expiration is next Friday. So this is the beginning of the roll period, and which is why you see the gap. Which is why you see the gap up on a non-back adjusted target. I'm using the non-back adjusted target right now. And this, technically, with all the testing I did, this still counts as hitting the 87.5. So the 87.5 rule is done. Is done with the S&P. So the 87.5 is now reconnected with the S&P. So that's where that sits right now. Let me just adjust these. So yeah, I mean, this will still be a gap magnet at some point, just not today. This is where it's really handy to look at just the cash, like the SPX, or you can look at the spiders and the Qs. They actually hold more weight for me. This is the one time when there's roll periods that I either like looking at the spiders and the Qs more, or I look at the cash more. So that's just a little something. Right now, the next key level, if it rallies today and takes out 46.45, remember, we're on the March contract now. No more D's contract. We're on March. 46.68 is the target on the March contract. The next key target. The major support will come in at 46.15. If we break below 46.15, we're looking at about 4,600 to 46.05 as the next level of major support based off the March contract. Okay, other than that, just waiting for this to shake out. You know, starting of roll days, I mean, the contract's been trading, but when you have more people coming in and starting to roll, you get some interesting anomalies sometimes. So I have to really let this to play out. So I'll be watching minor. Let's see, where are we trading right now? 46.32. Let's find some minor. There isn't a lot of minor levels of support. If we break below this 46.30, then I'd be looking right around. Let me just see. I'm just curious where these levels line up. Yeah. So I mean, this is technically the gap up due to roll, but I wanted to see where that 50% level sits. So I'd use 46.15, 46.22 on a break of 46.30, 46.22, 46.15, and then 46.07. That's what I would personally use for the key support levels. Let's see. Who has? Good morning, Richard. Are those numbers bullish? Seems Nick always pumping every data point. Well, see, this is where, if you're looking, this is where I don't know if bullish, if the numbers are stronger, but I don't know if good is bad and bad is good. Because the people who wanted the rate cuts in March, this would be like, no, unemployment's still too long. You're not strong. You're not getting the rate cuts. But then are we falling off a cliff in terms of unemployment? No. So this is the whole mixture. It's pretty much however people want to interpret them at this point. And right now, everything's still being interpreted sort of in bullish mode. We look at the NASDAQ. The next minor level is 16.3. Nothing's changed. We're trading 16.164 right now. So 16.247 and then 16.3, 16.303 to be exact, and then 16.550 are the key levels going up. Right now, I'm going to have to do the same thing. But all right, the key level, if we really break down again, the key level is going to be the 16.1, 16.104. Break below that, 16.075, 16.046 to 16.50. That's going to be the level. So the markets, markets right now, you have the gap up due to the contract roll because we're now in the March contract, which I've said. But the market it snapped back after the initial print. It went boop. And then, but it looks like it wants to retest some of these low print areas. So when I say low print areas, that was the quick rush down low from when the report came out at 7:30. So really, you can see here how these lines up nicely with the harmonics. So you had you spike down just below the 62.5 and coming up at the 50%. So this is, and you can see how well these harmonic levels look. So this is where I will look to utilize these levels through today, because not only does it correspond really nice with the support and resistance, it corresponds really nice with just even lows and key closes off a report structure. So what would I look for? A possible breakout area higher would be gaining 16,190. 16,190 to 16,2 is going to be very key resistance, but above 16,2, then I go to 16,218. We break below the 16,161, then I'd be looking for 16,132. That's besides using any other short-term price action. So hopefully that's helpful to somebody. That's the goal of this channel. Still holding the rotation zone. So we'll keep an eye. We'll get stuff flushed out going into next week. Dow, same story here. Dow holding up better. Key support I'm looking at is 36,350 in the Dow. Key resistance is 36,550. I'm not even going to go in shorter term levels there. Above that recent highs is 36.7. Russell, remember, is not a roll yet. Russell is not a roll. Russell's rolling, starts rolling on next Wednesday. So the levels have not changed on Russell. On the Russell. The good old Russell. See, I mean, this was nuts. Look at the Russell from the it's bearish. No, it's bullish. No, whoa, whoa, whoa. I mean, I don't get it, but still using the short-term harmonics. Still using the short-term harmonics. So the key level for a breakout I'd be watching is about 1876, 1877. Breakdown, I'm looking below 1865, 1864.2, 1865. In here is no man's land, support resistance. Let's see. Good morning, Legion Reaver. We'll get to Lulu's in a bit. Yeah, VIX has dropped. I was just going to do... Sterling's taken over the channel. Sterling, we're in sync. VIX has dropped. There's no rear fist. Still sell vol mode. Nothing's changed. I don't need to do the analysis again. Still 1330, then 1430. The key support coming in 1245. If the VIX does not really strongly start moving back up, you know, it's choppy to slightly bullish. If it starts moving back up slightly, it would be choppy to slightly bearish unless we get the momentum bars. The DAX. Coming up here. Coming up, what do we have here? What do we have here? In DAX world, we have a little mini double. It's the only bearish mini sign, and that's still, look, that only takes us back to the top of the rotation zone, which is how much of a run the DAX has been on. So that would need, I'd really wait for with this, right for a daily close below 16,658, and remember, lower probability because it's right there with the rotation zone. Next key level, remember the DAX is a roll next Friday. Next is 16,856, 16,850. The notes, of course, moving after stalling out against the harmonic, the top harmonic and the 200 area. Remember, 200 is an area. Reversing rather strongly. Now, going into the beginning of next week, I'm going to be watching for the secondary reaction, which would be back up to see if we get a more significant topping pattern. Other than that, not much to talk about today. Let's take a look at the yield. The micro yield. Right in here, we got the first reaction. So in this, I'm going to be watching for the secondary reaction at the beginning of next week to see how far we pull back. But I'm starting to watch for, remember, we're in that significant bottoming area. And I really believe, personally, this isn't based off a trading strategy, that rates have eased way too much. Way too much in the last month and a half. So, watching for some kind of counter move back up, but there's no fantastic pattern just yet. It's technically a %B buy if we close above yesterday's high, but this would have been traded on the report breakout. So that's the key area I'm watching going into the close. 10-2s. No steepening on the table yet. And right now, this is with this reaction here is still leans towards bullish in the short term. The dollar spiking below a little trend line and reversing up a little gap down, and then the quick move back up. So the only thing in the short term that invalidates the bullish case is a 4-hour close below 102.86. The second and the first and the second targets are within the move that started it. Other than that, so from any bullish trailing, remember there was a percent beat buy. So now the worst case stop would be back here. The worst case. Other than that, we start moving above this 103.85 level. The next key target, 104.15. The declining 50 and the prior support level. Crude, as I mentioned, the first target, double bottom, triggered, first target hit, and pulled back so far. So, already first target being hit. Remember still, I'm going to be interesting to see. It's still the lower probability because it's against the rotation zone, but it could easily complete before hitting the 8. I'm really going to be watching to see if it drops below this area right in the candle bodies. Remember, between the candle body and the wick is very key support. So that's 70.05 technically. We start closing back below that. It is probably going to peter out, but that's the key area. And technically the invalidation point right now is a close below 69.73 or a trade below 69.42. Gold, breaking down again. Breaking down. Coming still down. No bullish action after that breakout, but gold getting to cycle bottoms. Right now, today, I'm watching 2020 to see if that level of support holds. That's going to be key. And on the bigger term chart, we still have the secondary little area. I'm keeping an eye. We start breaking, though, below this night 2000 area, then it could be a more significant top in the short term. What else do we have? Yen, after this continued down to the 200, which was my target for not just yesterday, which was a bigger target, and now bouncing, but I'm going to be watching for another rollover play in the yen. Euro, hitting the 50% harmonic. If we break below there, 106.60 is the next target. The only thing for a key resistance is now about 108. Right here, there's no great setup. We'll have to see if this sets up for any price action for next week. The pound, which triggered the double back on the 5th, now looks like we have bounced. I said yesterday this would be a stop raise close enough to the target, but now we've hit the first and we bounced off the second target this morning. We're retesting that area, and the final target's 124.82 from the double, coming in right with the 200. Trading right now against some pretty key support now. Spiders, as I said before, like to watch this price action a little better with the roll days or the cash, but little gap down. So on any rally, I'm watching a gap fill to close 458.21. That would be the first key level, and then about 459.50. Above 459.50 for today, I just used the short-term harmonics. The short-term harmonics, if it did break, would give me this 460.43, 461.22. But first level of support coming in at 456.45. And then our major support coming in right about 454.45 to 454.50. That's exactly what I will be looking at today. Technically, the close in the Qs above the 62.5 yesterday after bouncing off the 75. Any bullish First area, I'd still use a 62.5, 389.85. Then I'd use the close 390.43, then 391.27. My key support, I'd be looking at yesterday's open 388.07 and then the lows, which corresponds roughly to the prior harmonic right around this 386.97 to 397. Below there would be 385.50. All right. Let's just take a look at a couple other things, and then we'll get to Tesla's still in no man's land, just chopping around, not doing anything. Still breakouts need about 246.54 and support 232. And when I say if it runs back up here to 240, mid 246s, I'll see if it's going to roll over. I mean, right now is support resistance. So when I say a breakout level, that can also be used to trade against. NVIDIA, slight gap down, but nothing else to talk about there. Apple, slight gap down. I want to take a look at Microsoft, then we'll get to Lulu, because Microsoft reversed rather quickly today. Microsoft reversed rather quickly with the pre-market price action. No double. No double. So that's interesting. I'm really going to keep an eye on this to see if we get a and there's still a gap fill left behind technically. I think there is still, or did it fill to the 374.50, 374.60? No, there is still the gap fill. I was not hallucinating. I'm going to be keeping an eye on Microsoft too going into the open. What else we want? Lulu, which has a daily double top with the gap down. The daily double top with the gap down. Non-farm payroll singing Friday. How about that? People are tuning out now. So we close below 452.23. Triggers, and it's technically still a lower probability because the 21's not out of the way. But I'd be watching for a potential partial gap fill than a rollover play. But that is a valid double. And look how overextended this is from the weekly. This could easily complete the daily double without even returning to the rotation zone for the weekly with cycles at the top. So this is actually a really, 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 really good setup. Now, that does not mean the probability shift because it's a really good setup. It's just a really good setup. Probabilities you still have to manage. You don't take more risk. But, and look where this is. I always find this fascinating. Look, if you take a look at the prior key resistance, so it based sideways. It's an example of a sideways base with rising lows holding the rotation zone. I've talked about this pattern many times. So, chipping away at the resistance, making higher lows, holding the rotation zone, and then breaking out, and then running out of steam with the earnings report. The earnings, which was still a beat, but this already ran up so much pre-earnings. So that's where we have what we have. Paramount in play, deadline reported. Paramount. Let's take a look at the Interesting. Well, it's running into some major resistance. It's going to gap up and form a double into this. So I would not be chasing this necessarily higher today. I'd be looking, but the key stop level, if this does form a double against the daily 200 and is trading into some very key resistance right here, the prior breakdown zone, it could potentially see some backfilling, but any bullish play is going to give a great stop level. So we'll have to keep an eye on that. You're a songbird for our generation. Oh boy, I'm not singing ever again. I can't sing. You would trust a weekly potential double bottom set up in WBA? I don't trust anything with Walgreens. Now I can tell you right now, it's too sloppy. Do not, that's a mess. That is a mess. I'd be looking at this as making a base. So right now, I'd be watching if we, for a key resistance being this 24 area, 24 to 24.50, chip away at that. But I'd be watching for it then to hold 22 on any pullback level and establish something. That would be short term. All right. Thank you, George. Everyone else, have a fantastic weekend. Let's just peek at the futures going into the open. What a mess. What a mess. Still same levels as before. Other than that, with this kind of roll day and non-farm payrolls, just don't do stupid. This is not a day to do stupid. This is the Sterling Panda trying to climb into the hammock day. All right, with that, thank you everyone for tuning in, and I will see you all next week. Bye for now.